What's up, you guys? Jason Wheeler here with FastPacedLoans.com. I want to check in real quick here and talk about what's going on in the marketplace here in Diablo Valley, here in the East Bay area with real estate and mortgages. It's pretty exciting because rates have hit 2017 lows, but home sales have been really kind of drab this year so far, despite what you might be hearing out there. Home prices have this summer was not. Sales were not as exuberant as they were last year, although they have been topping out. There's been some crazy ones, but in general, the market's kind of slowed down, So let's take a look here. The bidding wars aren't as bad. There's a lot more opportunity, but as far as interest rates go, it's really interesting because if I move myself over here, this is a 6-month chart of interest rates, and 6 months ago we were way up here. And here we are just today. You can see today, this is a 6-month low that we are at for interest rates. So if you haven't looked at refinancing or maybe pulling cash out of the house that you have, now would be a great time to look at those options. Rates are so low right now. I'm locking in some of the lowest rates that I have in a long time. So it's really exciting. If you want to refinance or looking at taking cash out of your home, this is a good time to take a look at that. Okay. As far as this goes, the good news on rates is great. Rates are still really low, but unfortunately, it looks like new housing, worst annual pace in 3 years for new home sales. That's crazy. So there's a lot of building being done. People are building homes, and that's happening all around us. They're here in Pleasant Hill in my market. We got 2 new subdivisions going up, which is kind of rare. Existing home sales hit 2017 lows. So volume home sales, it seems like what's going on is, home sellers, they think their house is worth more than what they want. Home buyers are starting to be a little bit wary. They're not falling into these bidding war traps as much as they were a few months ago, and things are sitting around the market a little bit longer. So it's pretty exciting. If you're a buyer, it is pretty exciting because you're going to have, going into the winter months, you're going to have a lot more opportunity to make offers on real estate without having to deal with tons of other people that are going to be competing with you on bidding. So let's take a look at a market report here. This is for Pleasant Hill. I like to focus on Pleasant Hill because that's my main market. And, we have currently, you can set up one of these market reports for whatever market you want. You can log in here at fastpacedrealestate.com, make a free account. You can set up any of these market reports that you want to on your own. But we have 32 houses on market here in Pleasant Hill, which is pretty normal. That's not too high. That's relatively normal. And properties under contract, that we currently have 49 properties under contract. The list price currently, the average list price is about $449 per square foot here in Pleasant Hill. Now that's an average list price. Okay, homes are still selling pretty quickly. But if you look at the sold properties here in the last month, there was 37 properties that were sold in the last month, and the average sale price was for $469 per square foot. So here in my market in Pleasant Hill, things are still really going for what they are being asked. Things are definitely selling for list price. However, there's a lot of opportunity in other markets around me where there's a lot more price reductions that are happening on a regular basis. And if you want to stay caught up on price reductions, if you want to log on to fastpacedrealestate.com, create a free account, you could actually track any homes that are reduced. You could look at favorites and look at any homes that are reduced and kind of keep track of what's going on in your niche market right in your neighborhood. Okay, so you can set up a search that's right in your specific neighborhood, and you can be notified when the homes are selling right around you. So I encourage you to do that if that'd be of value to you, if you are following the real estate and mortgage market. If you're not following the real estate mortgage market, honestly, I don't know why you're watching this video. Okay, so you can probably just go ahead and unsubscribe. But anyways, I appreciate you being here a lot. Thanks a lot, you guys. So that's my real quick update. As far as locking a rate, let's look at what mortgage rates are doing, okay? Real quick, so they're at all-time lows, so what does that mean other than the chart? So I'm going to do a real quick search here and look at one of my top investors, and this is for a 15-year fixed. So 15-year fixed at no points, you're looking at 2.875 on a 15-year fixed with no points. So that's pretty low. Now, if you want to, let's look at a 30-year fixed a fixed 30-year, same, all other things being the same, let's take a look at exactly how low rates have gotten since we're at 6 months lows. What does that really mean, 6 month lows on a 30-year fix? So let's take a look here and see. We're looking at 3.5% on a 30-year fix with no points. Okay, so really small credit back towards your closing costs. If you want to do a no-cost loan, you're probably looking at like 3.625. So this is really, really good pricing, great pricing. If you want me to price out your loan specifically, I have 60 different banks that I work with. I do hard money, conventional, government, all types of different deals out there. So I appreciate you getting in touch. If you do have a question specific, I will run your scenario. I will get you the numbers. And thanks a lot, you guys. I appreciate you being here. As far as locking, if you are in the middle of a home purchase or a refinance, I definitely recommend that you lock your rate in while they're low like this. You want to protect yourself from any losses that you can. So thanks a lot, you guys. Hope you're doing great. Make it a great day. Thank you very much for tuning in. I appreciate it.